Do your own research, look at the charts, learn the charts, and that'll guide you in a much better way than listening to anyone, including myself. I mean, everyone needs to, you never want to just follow someone blindly. You always want to understand why. I mean, it is an insane week. What's so interesting is that because there's so much starting Wednesday, really Tuesday after hours, Monday has been just a gentle, very light volume day. It's like the calm before the storm. So basically what we have is we had a breakout on Bitcoin in the near term right here. And you saw a close above with a confirming move following it. And what we've done since then is you've kind of created this little bit of a channel of consolidation right here, which is actually, I mean, a lot of investors say, oh my goodness, we've been down, pretty much 2, 4, 5 days out of the last 6 on Bitcoin. But notice how it's a very slow kind of grind lower. Today, it's getting a little bit more fast, but for the most part, this is actually what we would refer to in the technical analysis world as bullish consolidation. And so what I'm really watching is this 21.8-ish level. I want to see where it closes. It can close just below that, but you don't want to see it trade down in this range too much longer before it starts to move up. But I'm in the camp that over the next, rest of July into August, I think Bitcoin still has more upside to go. I'm looking at a target of 25.5, which is up here. And then eventually I even think we could get as high as around 28.5 or so right up here. This is kind of my max move though. This downsloping trend line comes all the way from the all-time high. So notice how these two lines are right in the same area. So I think that, again, that would be your maximum upside. Your shorter term target would be 25.5. So I am bullish near term on Bitcoin, even though I'm midterm bearish. Yeah, so I think number one for me is a weakening dollar. I think also if the Fed on Wednesday is not as hawkish, if let's say they open the door to saying, hey, we're going to slow down, maybe we're going to pause, that would be a risk-on scenario where all of a sudden you see this risk-on in the stock market, NASDAQ stocks get another leg up, and that would also lead to another move up in Bitcoin. So I think the weakening dollar would kind of coincide with that as well. We see those type of things move together. The more dovish the Fed, the more they're not tightening monetary supply, so the dollar doesn't necessarily get stronger. So for me, that's exactly it. The Fed decision Wednesday, GDP on Thursday, those would be the driving forces that would probably lift Bitcoin. You had one of the big whales holding, I think, $1 billion of Bitcoin. He unloaded a majority of his stake. And, if we've already seen that being distributed into the system, into the Bitcoin market, and investors have bought that up, maybe that's a small positive in all fairness, that the market was able to absorb that. And I know we have, some other, I think Mt. Gox might dump 150,000 Bitcoin. I want to see the market, the Bitcoin market, absorb that. Maybe it goes down a little bit, but if it can absorb those type of sells, then what it tells you is even in a bear market, there are still buyers out there. And that's a very longer term bullish sign, even if it's not a very short term bullish sign. I follow the 20 moving average, the 50 to 200. I know a lot of people follow the 100 and the 150 as well. And basically, I don't know if there's something psychological that makes us as humans abide by some rules about like the past 20 days, which is the 20-day moving average, or if it's just that we all have it on our charts now and we're all like, oh, look at that. And when you have a million people saying the 20 MA is being hit or it's breaking, that can psychologically trigger more selling if it's breaking versus if it's holding. So I'm not 100% sure about the underlying powers of the moving averages. It's just something that historically has always worked until it doesn't, right? Until it breaks. When people bought it at 60,000 and it's down at 20 or 19 or 18, there's going to be a point where they're like, listen, I'm just going to tuck this away. I'm a long-term hodler. And then as soon as price starts to spike, which is what we've seen recently, they're all of a sudden like, oh my goodness, maybe I should bring it back, because if I can just get back to 60,000, I'll sell and break even. That would be an amazing recovery. So it's a very psychological thing. And I agree that you just can't say, okay, there's a lot of storage going on off the exchanges, so that means people are just diehard going to hold forever, because mentality and psychology of the investor can change on a dime. And you know that. I know you know that. So my concern with that is that every cycle, if it's the stock market, we've seen it in the stock market, but every collapse, you saw this in 2009, retail went away for years and years. And we saw this in 2000 with the dot-coms. And so the fact that hasn't happened, does that tell us that we haven't seen the full flush out yet in cryptocurrency? And the reason I say that is because if you just go back to last year, we had dropped to 30,000 before that run up to 69,000. And people got programmed to think that, hey, listen, if we drop to 30, and we're only at 20 now, which isn't so much but maybe in 6 months we're back to 75,000, you know? And so I think that's my one concern is you haven't seen that full flush out yet, which means it may still not be over and we may need to see the retail throw up their hands and walk away. And again, I don't want that to happen because I think it's so useful and so good for retail to be involved, but it's just the way cycles work, unfortunately.
Yeah.
I think the liquidations help put in short-term bottoms, but the ultimate liquidation will be that one where the retail kind of gets really scared and kind of stays away for possibly years on cryptocurrency. But I think when you get stuff like Voyager, when you get Celsius's bankruptcy, those, believe it or not, they scare the public to the point where anyone who is going to sell sells, and then everyone else kind of holds on and there's no more sellers. And that's why you get these little short-term kind of mini bull markets within a bear market. And I think that's what's going on here. So ultimately that will lure, as Bitcoin inches up, it lures those investors that kind of got spooked earlier to come back in. And the next, they basically, unfortunately, lure enough in that on the next dump out, then you'll see that selling pressure again. We've seen an amazingly big bounce in Ethereum. But the one thing I'm seeing here, and I'll flip over to my chart and show, is that basically we have this kind of bullish consolidation. So you do see a bull flag forming. This is a very clear bull flag. Now, I don't want to see this candle break down too much. Right now, it's right at the lower end of that flag. But basically, the upside is somewhat limited here. I mean, there's the first resistance level, which is right here around 1700. So we're not too far away from that. And then even if it gets through 1700, around 1900 is the next big resistance level. So I'm in the camp where I look at this and I say, okay, yes, there's some upside left. And I believe that Bitcoin, Ethereum, they will see upside, but you could actually maybe see the run occurring into the merge and then a sell the news event. And I think that is the likely scenario here, where maybe we get to 1900 and then once you see that merge occur, then the selling takes back over.
So
I think if the Fed said, listen, we are not going to stop until we get back to 2%, even if the economy weakens, and they raise 75. I mean, I think, again, the 75 or 100 basis points is somewhat non-factor at this point, but it really is that statement, because that statement, if they're like still gung-ho, like, basically hell or high water, we're going to make sure that inflation goes to 2% or under, then they're going to be raising a lot more, and that's going to spook the markets quite a bit. So I think that's the bottom line, is that's why Wednesday is so important. Also, because Wednesday, again, you assume that they know the GDP number already, which will then guide us to what that GDP number should be. So I continue to be a gold bug. I mean, again, since the start of the year, I said gold would be a better performing asset than Bitcoin and the stock market. So far, I've been right, but I honestly have been disappointed with gold's performance recently. I think the fact is that if you think about the Fed maybe potentially getting inflation under control, and again, I think it's not that they're getting it under control, but that I believe we've seen peak inflation, then it does create a scenario where people say, okay, well, if inflation is going to start to come down, do I still need the safety of gold? I mean, what if inflation, in this perfect world, inflation goes back to 2%? Well, what's the point of gold then, right? That's what people are thinking. That's why gold has underperformed here. I don't think that fantasy will last very long, in my opinion. So I do think that gold will perform. I do think it'll perform better over the next 6 months into year end than crypto as well as the stock market. Long-term Bitcoin will far outperform gold though. So I think gold over the next year or two, better performer, not over the long term after that.